Alright, what's up guys? Welcome back to my YouTube channel. My name is MerlinFxng and I document my journey right here. On this YouTube channel video today, I'm going to be sharing with you 10 things why traders lose money. Alright, in trading. Remember, in trading, new beginners traders tends to lose money because of these 10 things. Alright, so I'm going to be breaking it down for you step by step, and also at the end of this class I'm going to be giving you solution for that. Also, make sure you stay tuned and watch this video till the end, and don't forget to subscribe if you're new to this YouTube channel. Alright, let's get the video started. Alright, why traders lose money. These are the 10 things why traders lose money and how to avoid it. Now, the number one thing is why traders lose money is the title. This is going to be a class between me and you guys. Alright, so make sure you stay to the end. The number one thing why traders lose money is no risk management plan. Alright, no risk management plan. Alright, now most traders risk too much on one particular trade, and this happened to me. That's why I said I'm also teaching you guys what I've learned from my own personal trading. Right, most traders risk too much on a particular trade, on one single trade. They tend to risk too much. Let's take for example, a new beginner trader is having $100. Alright, and he wants to he saw a trade that is interested in placing that particular trade, and it went ahead and risked the whole $100, thereby risking the whole of his account on a single trade. And maybe when the trade goes in his direction, he would think it has arrived. And now, one thing trading does is sometimes trading is funny, because you risk your whole $100 on a particular trade and it went to your direction. Maybe you made $300. Alright, now what the market does is that you might be thinking that this might be beginner luck and this is a bad behavior, and now you might be thinking that's good. But what that is doing, that is setting you up. The market is actually setting you up for a catastrophic disaster. Let's take for example, you placed your trade because you don't have any risk management plan. You risked the whole $100 and you made $300, and now you had another trade, you risked the whole $300. Why? Because the first money you risked off, it gave you $300, and you saw another trade, you were like, oh, this is a nice trade for me to risk this whole amount. Now you risk the whole $300 and it gave you what? Maybe it gave you $1,000. Let's take for example. And now in your brain has automatically said, this is how it's easy to make money. And now let's take for example, remember you're risking the whole of your account. You don't have no stop loss, you don't have no take profit. You just take profit wherever you feel like you're okay. Now you saw another trade and you risked the whole of your $1,000 account. Maybe this is the trade that did not go your way, and what happened? The whole of this $1,000, it will what? It will turn to zero. Your account balance will turn to zero. Thereby, that is why most traders lose money, because they don't have any risk management plan. Alright, stay tuned. In this video I'm going to be breaking it down on how to overcome all of this. This is the number one thing why most traders lose their hard-earned money in trading, especially new beginners traders. And now the number two thing is overtrading. That's the number two thing, overtrading. Every new beginner trader, they want to trade every small move. They trade out of boredom because price is moving massively. They feel like, oh, I'm missing out on this particular trade, let me jump in on that trade, and they end up taking more trade than they intend to trade. And maybe their initial plan was for them to take one or two trades, either stop loss or take profit. They close their laptop and what they are done for that day. Because they take the first trade, they take the second trade, they saw another opportunity, they take the third one, they saw another one, they take, and before you know it, you have over traded. Maybe you have over traded to your, if you started with $100 and you started with loss, maybe with this over trading your account might be $50 before the end of the day, or even more than $100 depending on how it is. But what this is doing, that is setting you up. If you have mastered this habit of over trading, even if you have $1 million account, you're still going to blow it, because you are going to be taking trades out of emotions, not out of your trading plan. Alright, so over trading kills new beginners traders, and over trading kills account. You might have seen so many traders say, I made $3,000, but I over traded and I lost all of the money. Alright, over trading kills. Alright, over trading kills account. You don't trade out of boredom, you don't trade out of because, oh, this market is moving in my direction, I need to jump in. No, that's over trading. And this is the number 2 thing why most new beginners traders lose their account. Alright, so let's go to number 3 thing why most new beginners traders lose their account. Now the number 3 thing is trading without a plan. This is unlike trading, because if you have, this is unlike over trading, because if you have a plan, you would not overtrade. Alright, so many traders don't have no clear entry, they don't have a strategy, they don't have an exit plan. They just wake up in the morning and just jump into the market and trade. They don't have entry, they don't have stop loss, they don't have take profit. They just feel like they should trade. Alright, and feeling is not a strategy. Feeling is not a strategy. Because you feel like it doesn't mean you should do it. Feeling is not a strategy. Alright, this is why most traders lose money, because they don't have a trading plan. If you have a trading plan, you will not overtrade and you will not over risk your money. So this is the third thing why most traders over risk their amount and lose their account. This is why traders lose their account. Stay with me in this video and I'm going to break down every single thing, and I'm going to give you a solution on how to overcome all of these things. Now the number 4 thing is letting emotions control them. Letting emotions control them. This is very important. This is very, very important, especially if you are a new beginner trader. Even advanced traders do make this mistake, but the difference between advanced trader and a beginner trader, they always realize fast. But as a new beginner trader, if you started out with letting your emotions control you, it's going to damage your trading career. Eventually you might quit trading, because you end up, if you don't discover it fast, you end up doing the same mistake. Even if you have $1 million, you will still blow it, because you are letting your emotions control you. Here is it. New beginners traders let fear control them. They mix fear, close trades too early. Sometimes they close trades too early, in fear that, oh, what if this trade goes against me, what will happen? They close trades too early, they hold trades too long, they hold, maybe they have their TP and they have their SL, and the trade is going to their direction. They say, oh, this TP has been hit, let's increase our TP. They tend up increasing their TP and the trade is going, maybe one sharp candle and come down, and you come down and just erase everything. Also, they hold trades too long. If trade is going against them, instead of them accepting the losses and moving on, they end up increasing their stop loss, shifting their stop loss. Before you know it, the whole account is gone. So as a as a new beginner trader, you need to understand that emotion kills. Emotion kills, especially in trading, not just trading, in all of your business. Let's take for example, you have a shop, and every day you let your emotions tell you, okay, don't go too early, go in the afternoon, don't go too early, go this, go that. You are actually going to make money, but you will not make money like someone who went as early as 7:30. All right, because you let what, you let your emotions control you. All right, so that includes trading too. You don't let your emotions control you in trading. All right, so that's the number 14. The number 5 thing you need to understand is, and this 5 thing is very important, it's very important. That's the number 15. The number 15 is using big lot size or using big leverages. This has happened to me. You see a particular nice setup, it looks and it matches all your criteria, all your entry plan. Because it matches all of them, you say, oh, let me add one more lot size. Maybe you were using 0.1 lot size or 0.5 lot size, you increase your lot size to 1 standard lot or 2 standard lot. All right, also maybe you've been using 10 leverage on crypto, you increase it to 20x, 50x leverage, and now you think that maybe you want to make fast money. Now you need to get it right. You need to understand that yes, you can make money, also you can lose money, but at that particular time what your brain is telling you is not, your brain is not even telling you about the losses you will make if that trade doesn't go to your direction. What your brain is telling you is about the profit you will make if that trade goes in your direction, and that is very wrong. All right, you want to make quick money instead of long-term survival, and the goal of trading is for you to survive, actually survive first before thinking of making higher profit. Because if you don't survive, you won't make money in this forex or trading industry. You need to learn how to survive. So therefore, you don't need to use big lot size. Just stick to your, the only thing you need to do, if you've been using 10x leverage on crypto and you're comfortable with that 10x leverage, and maybe you want to increase, you can increase it to 15x leverage, and you make sure that you're comfortable with that 15x leverage. You start increasing it gradually. Also in forex, if you're using 0.5, you increase it to 0.6, you just increasing it like that. Before you know it, you're comfortable with it. This is what kills account. This is what kills beginners traders account, using big lot size or big larger leverages. All right, that's number 6. Number 7, number 16 is, number 16 is revenge trading. This is very important. Revenge trading. This has happened to me a lot of times. If you go back to my YouTube channel, you will see where I made a video. I passed an account. I passed 3 Propfirms in one single week because I need immediately I passed my Propfirm account, those 3 Propfirm. I started having this urge of, I just needed to make money fast. I need to make this money fast. Guess what? I stopped risk management. I stopped profit target. I did not focus on all of this stuff. What I was focusing on is how to make money fast and start getting that payout. And this led me to reverse trading. I will take a trade and it will hit my stop loss. Initially, if trade hits my stop, if I encounter 2 stop loss, I'm done for that day, I'll close. But this one, I will hit my stop loss and I will go ahead and place that trade. And I've started using big lot sizes. Guess what? I blew the whole of that 3 accounts in that same week that I got funded, and that got me so messed up. What am I saying? You're a new beginner trader, you want to lose more. If you lose one single trade, you want to revenge. You want to say, oh, I lose $50, let me double down, let me risk $100. Maybe if I make profit, I will balance, I will increase everything. Now that is revenge trading. And what market does, the market doesn't respect you. Even if your father, your mother, your siblings are dying, the market doesn't give a fuck. All you need to do is stop revenge trading. All right, you lose 5 times, you lose 2 times, close your laptop, you're done for the day. Revenge trading kills accounts more than any other thing. If there is anything that kills account mostly, is revenge trading, because a new beginner trader always gets stuck in this particular aspect, which is revenge trading. They tend to revenge trade if trade hits their stop losses. They don't like losing, and in the game of trading you need to understand that losing is the part of game, is the part of the game. If you don't lose, you're not making money. If you lose, then you are making money, because the market wasn't even designed for you to make money. So you need to get your things right. If you want to stop blowing account, you need to stop revenge trading. All right, so the number 7th thing right here, the number 7th thing is no trading psychology. This is very, very important. No trading psychology. So many traders, they don't work on patience, they don't work on discipline, they don't work on confidence. Now you need to understand that trading is actually a mental game more than the technical aspect. Trading is a mental game. Trading deals with you personally. It exposes you to your hidden habits. You would think that you don't have greed, but trading will expose you. It will show you that yes, you are actually a greedy and stingy human being. You would think that you are patient, but trading will expose you and tell you that you are not actually patient. Rather, you need to work on your patience. Trading will expose you that you are not actually confident. That happened to me, because you will see your setup, but you hesitate to take that particular trade. That means you are not confident, and trading will expose you to all of these things. Now, I already told you need to stay tuned till the end of this video, because I will be breaking down the solutions to all of this. Now, you need to understand that trading is more of a psychological game more than the technical aspect. Don't get me wrong, the technical aspect is also good, but it's more of a psychological game, because you need to master yourself first. Even if you have 100% win rate, you don't have patience, you don't have discipline, you don't have confidence. Even if you have a strategy of 100% win rate, you will still end up blowing your account, because you don't have these 3 things. And these 3 things are found within ourselves, not the technical aspect. The technical aspect, I always tell people, the technical aspect of trading is not really hard to master a strategy. That is why you see so many beginners traders tend to jump from one strategy to another, thinking that the strategy is the problem. No, they are the problem. All right, they are the problem. They are not patient, they are not disciplined, and they are not confident within themselves. All right, so that's the number 7 thing, which is trading psychology. The number 8 thing right here, the number 8 thing is chasing signal. This is very important, especially if you're a new beginner trader. Chasing signals. Now, new beginners traders often depend on Telegram channels, Telegram signals, Twitter calls. When signals fails, they are confused. All right, if you don't know why you're entering a particular trade, you don't deserve any profits. All right, so one thing you need to understand as a new beginner trader, it's good to always follow signal, but you need to follow signal if you know what you are actually doing. Because if you're a new trader and you're depending on signal, if that person calls a trade, you will not know why he called a trade. But if you actually understand yourself, understand your strategy, if that person calls signal, what that signal will help you, you're going to be looking at that person's signals, and also you are going to be looking at the market to compare your own with the person's own. Then if it aligns, you use accurate risk management and enter your trade. If you understand what you're doing, you can actually use signals. But if you are a new beginner trader, I don't advise you chasing signals, because if that person doesn't drop signal, you are going to be stuck. And if that person loses more than 5 times, you are going to lose more than 5 times, because one, you don't understand why that person is taking that trade. If actually that person is correct, don't get me wrong, so many people have the way they view the market. You might be buying, Mr. A might be buying that particular pair, maybe Mr. A might be buying gold, Mr. B might be selling gold, and they are going to make profit. The two of them are going to make profit. Don't get me wrong, everybody views the market in his own way. All right, but if you understand why they are actually buying. It's going to help you more to understand why that person is actually buying. So as a new beginner trader, you don't need to focus on signals. You don't need to rely only on signals. Alright, now the number 9 thing is unrealistic expectation. This is very important. Unrealistic. This is very important. So many new beginners traders tends to they are expecting to turn $50 to $1,000 in 1 week. Don't get me wrong, it's possible, but the high chances of doing that is equals to 0. Now, you see so many people do crazy flips online. Your gurus, they turn $100 to 1 million. Don't get me wrong, before they eventually did that, they have lost more than 5, 10, 20 times. Why are they comfortable? Because they have more than enough. Even if they lose $100 30 times, it doesn't affect them. Now imagine you that have only $50 on your account. You're setting unrealistic goals. You want to turn your $50 to $5,000 in 1 week. Now you're putting yourself under pressure, and when you're being pressured, it makes you make emotional decisions. Like we have said, when you're under pressure, it makes you take emotional decisions, and you revenge trade. You use unrealistic expectation. You don't use clear risk management. You are just all in. Once you see a particular trade, you go all in, thinking that that trade is going to go in your direction, and once that trade doesn't go in your direction, you blow your account and you end up calling trading a scam. So when they see traders who set unrealistic expectation, they over risk and they rush the process. And like I've said before, trading is more of a survival game than actually trying to be perfect. No, you're not going to be perfect on this particular aspect. Even traders who have been trading for 10-25 years, they still lose crazy amounts of money. Would you say they are not doing the right thing? No, it's just that the market is not there to punish you, but the market is there to teach you how to master yourself. So as a trader, you need to set realistic expectations. You need to set realistic expectation, because unrealistic expectation equals to pressure. You'll be pressured to do what you are not supposed to do, and that will end up making your account to blow up. Now the number 10 thing that makes traders to blow their account: no journaling and no reviewing. No journaling. This is very important. Like I have said, I'm a fan of journaling. I have almost 3 journals that I journal every of my trade. Now, if you're a new beginner trader, how do you track your process? Is by journaling your trade. You track your process by journaling your trade, because if you don't journal your trade, you will not understand what you're doing. So you always need to journal your trade, because by journaling your trade, every weekend or every month, you go through your journal and find out why you've been losing, why am I been winning. Now if you've been winning, you check your journal, you say, oh, I've been winning this trade, this is what I'm doing right, and you continue doing what you are doing. Now in my previous videos, I've already made videos that I always lose, but I go through my journal, I discover that I was over risking, I was trading so many pairs, and I had to cut them off, and now I'm winning. You get? Not that I'm much profitable, but I'm not where I used to be. Alright, so if you are not journaling as a new beginner trader, you will always slack off and you always be left behind. So if there is anything you need to take to priority today in this video, you need to master the act of journaling. Whether you're journaling on your book, your notebook, or you're using a software. There are so many software you can use to journal. We have Google Sheets, we have Notions, we have Notepad. You can use any of those online tools to journal, but make sure you are journaling your trade, because most traders don't lose because the market is high. You get? They lose because they don't manage themselves. And if you journal your trade, you will understand that oh, I've not been managing myself, I need to change, I need to change this, I need to change this, and that's it. So these are the 10 things that makes traders to lose. Alright, this video is already getting long, but stay with me, and I'm going to share with you also the five things that will make you stop losing your account and overcome all of these trades. Alright, these 5 things are very important if you want to come out of a struggling trader to becoming consistently profitable. These 5 things are going to help you, right? These 5 things will help you become consistently profitable only if you follow these 5 things that I'm going to mention right now. Now you need to understand that most traders don't lose because the market is bad. They lose because they fail to master themselves. Alright, now here are the 5 solutions that will eventually take you out of blowing your account to actually doubling your account. Alright, now number 1 thing is master risk management. You might be wondering, why am I always saying master risk management, master risk management? Now, risk management is what will keep you long enough in the game. Let's take for example, you have a $1 million account and you don't manage your risk. When you see your trade, you use the whole of your 1 million to place a trade. It might work out for you maybe 2-3 times, but once it fails, that means you've lost the whole of your profit plus your capital. Why? Because you're not managing your risk. But if you manage your risk, let's take for example, you have a $1 million account and you're using 200k, and if you make profit maybe 3-4 times, and in the 5th time you take a loss, that means you're losing just 200k, and by that time you might have doubled your 1 million to maybe 1.6, 1.7, or even 2 million. But if you lose just 200k. Why? Because you are using one risk management. You've mastered risk management. Now the risk management I always recommend you beginners traders to use, we call it the 1% to 2% risk management. Now, one trade should never be able to destroy your account. That is what new beginners traders fail to understand. One trade should not be the trade that will destroy your account. Alright, you need to make sure that you are risking 1 to 2% of your trading capital. If you are having $100, you risk $1 or $2. You might be saying, this $2 is small now, what will $2 do to me? Now once you've gotten used to that 1 to 2%, it's already stored in your brain that even if you have 1 million naira, $1 million, 1 million euros, 1 million pounds, and you're taking a trade, it's already stuck in your head that you are only allowed to risk 1 to 2% of your capital. Now if you're using a $10,000, your 1% is $100. You can see the difference. But your $100 account, your 1% is $1. Now if you're using a $10,000 account, your 1% is $100 and 2% is $200. If you're using a $20,000 account, your 1% is $200 and your 2% is $400. You can see how it's increasing. The higher your money, the higher your profit. So you need to stick to that rule. It's very important. Now the number 2 thing you need to master is have a simple trading plan. So many traders tend to overcomplicate things themselves. Before you enter a trade, you need to understand why you're entering that trade, why you are exiting, where is my stop loss going to be, where is my take profit going to be. If one is missing, if one particular thing out of these things I've mentioned is missing, then you don't need to take that trade, because you need to make sure that those trades align with your plan. Why am I entering? Why am I buying this trade? Where is my stop loss going to be? Where is my take profit going to be? How many percentage of my account am I willing to risk on this particular trade, and how many percentage do I want to make on this account on that particular trade? Then if those things are complete, you place your trade and forget about it. You get? So these are the number 2 things. This is number 2 things you need to master if you want to stop blowing your account. Now the number 3 things, you need to control your emotions with rules. We are all human beings, right? We are not robots. Except you are a robot, then you don't have emotions. But so far as you're breathing and you have blood flowing in your veins, you have emotions. Why do you think people cry when their loved one die or when their loved one fall sick or something? It's because they have emotions, they have feelings. Alright, you can't get past that feelings, but you can actually control it. Alright, you can actually control it. It's just like a drunkard or someone who drank too much and is drunk and still wants to go and drive. Alright, now he's letting that drunkenness control him. But if he can be able to control that drunkenness, he can actually stay at home. I'm trying to make a point right here. So you don't trade when you're angry. You don't come to the market because you're angry or someone gets you upset. You feel like trading is the only place that will calm you. You're actually going to blow your account. So you don't trade when you are angry. You don't trade when you are angry. You don't trade when you are desperate. That's you are under pressure. You don't trade when you are bored. Because you are bored, you say, oh, I want to trade. You don't trade when you have gotten yourself into a big loss. Maybe you've traded 4 or 5 times and you are into a big loss and you still want to trade. You don't do that. All right, you need to control control your emotions with rules, because without those rules you cannot control your emotions. Let's take for example, you've taken 2 losses in a day and you see a particular trade that actually looks good, but because your rule says if I take 2 trades, either take profit or stop loss, I'm done for that day. If you have been able to master that and you control yourself, you can see that your brain automatically have stored that even the next day, if you see a particular trade after completing your trade set for that day, you will not take it because you've mastered it and you've already created rules and plan for it. Alright, so these are the things you need to master. This is the number 3. Control your emotions with rules. Now the number 4 thing, I said I'm giving you 5 things, right? The number 4 thing you need to do right here, and the 4th thing is very important. Trade less, not more. And this has really helped me in personal, and I'm going to explain. Trade less. You get? When I started trading, I think that I needed to trade every day. Even up to this year 2026, I was trading every day because I wanted to make that money. I needed to pass that account. I needed to start withdrawing because I was desperate and I was a bit pressured. I was broke. You get? So I needed to trade every day. I started trading more. I started trading the whole Forex pair. I trade GBP, Euro, USD, all the whole. Now the funny thing is, every week I always come out with minus or either break even. I was either making loss or I'm break even. And I came to understand that while I'm trading the whole of this pairs, why am I not making profit? It's because I was trading all of the pairs. I will make money on either BTC and I will lose it on GBP JPY. I will make money on Euro USD, I will lose it on AUD card. I will make money on Euro SND, I will lose it on USD card. You can see that I've been going back and forth, and I discovered that I actually don't need to trade the whole Forex pair to actually make money. I just needed to pick few and master it, set my rules. If I come to the chart, look at those pair, if there is any setup for me, I place my limit order and forget about it. Then if my trade should trigger, I wait for it to either hit my take profit, and or I follow my rules of if it hits my 1-to-1 risk to reward, I break even or I reduce my risk. Now immediately I followed that, my account that was in drawdown, I was in profit. Before the end of the week, I was already in profit because I was trading less. And the whole of this week I just trade, I think I took just 4 trades. I took actually 6, but 2 were losses, but 4 were in profit. And I was in huge, almost about, let me say 4%. I was up 4% in profit, and that was massive. You get? So you need to learn how to trade less. fewer trades, better setup, and more patience. The market pays patience, not activity. You don't need to always be active in the market before you actually make money. Alright, you can actually be trading. I've seen guys who trade just one pair. I'm going to be using a reference now, like Happy Forex trade just gold all his life, and he's been making massive money from gold. Alright, it doesn't matter if you're trading the whole 20 pairs of forex. If you won't make money, you won't make money, but you need to focus on fewer pairs and stick to it. Alright, trade less and not more. Alright, the last one before we end this session. Now the last one, which is very important, especially as a new beginner trader, I will always say it: journal and review your trades every weekend or every month end. Now you need to make sure that you get used to journaling your trade, because if you don't journal your trade, how will you know that you're missing all of this part? If I don't journal my trade, how will I know that I've been getting it wrong or I've been getting it right? If I journal my trade, if I'm getting it wrong, my journal will tell me, because journals don't lie. Alright, if I'm getting it wrong, my journal will tell me, and I'm going to do less of what I'm getting it wrong, and I'm going to be doing more of what is making me money. That's trading. Alright, as a trader, you don't need to always be focusing on trading the whole pairs. You need to focus on mastering yourself. Alright, master yourself and the market will pay you. Just like I have said, the market doesn't reward activity, it actually rewards patience. Don't forget to subscribe to my YouTube channel, turn on post notification video for more videos like this. I've already told you I'm going to be teaching you guys what I've learned in my trading journey, and I'm also documenting everything here. Thank you for watching, and I will see you guys in the next video. Make sure you watch this video to the end, and if you don't understand, you can go back again and rewatch it. Subscribe for more, and tell me in the comment section, how was your trading week? Were you able to make money? Were you able to follow your rules? If you were able to follow your rules, drop it in the comment section. If you haven't, also drop it in the comment section, and make sure you follow your rules in the next week. Thank you for watching, and I'll catch you guys on the next one. My name is MerlinFxng. Catch you guys on the next one.